last video I made, I said I wasn't going to do too many. Well, this one I'm doing because of some emails I've gotten. But before I kind of address those, I want to address another issue of some of the problems that we're having with Cengage and Blackboard. We're having problems syncing the programs together so the grades automatically come over. Also, we found a couple of assignments that just weren't grading people for some reason. I don't know why. I've called Cengage multiple times about both of them, and all they've told me, okay, yeah, we know about the problem. We're sending it up for somebody else to work on. Of course, I don't know who that other person is, you know. So, but as soon as we can find a resolution to the problem, we'll resolve it. I just want to let you know it's something that we're still working on. It's not something that we're ignoring by any means. Anyway, I want to get back at a couple of emails, and this stuff kind of scripted that I want to talk about because this chapter is really important. Now, I know some of you have already turned in, obviously have turned in, you should have turned in obviously a couple assignments already, but there's still a few more due. It's this chapter, and the stuff in this chapter is going to affect the rest of the semester. So, one person asked me, what does the term debit and credit really mean? Okay, well, all that debit and credit really means is left side and right side, and that's it. Okay, so if you're looking at a T account, for example, and I made a couple props here, your T account should look like this. Okay, the name of the account on top, debit on the left, credit on the right, and that's it. Now, if you're dealing with a journal entry on the other hand, okay, your debits should always be on top. Your credits should always be on the bottom. Now, some confusion I've also heard about is, well, why do you have to have an even number of accounts? And that is not correct. Okay, the dollar amounts, okay, in here, the dollar amounts all have to total up to be even. That's what they mean by balancing. Okay, the accounts. Now, you can have any number of accounts. You have to have at least one debit and one credit, though. So, for example, here I have, 2 debits and 3 credits. That doesn't matter as long as the total dollar amounts of debits and the total dollar amounts of credits equal each other. That is what's important. And remember, your debits go on the top left and your credits go on the bottom right. Notice the indent. That's also important. That's how you can tell them apart when you're doing them by hand. Alright, the next thing that I've been getting about is very commonly asked is the best way to figure out when to debit and credit an account. I'm not going to say who wrote this one in here, but how to debit and credit account. Well, the best way to know is, one, you identify which accounts you're working with, okay, to start. Then I take a look at what type of account it is. It's an asset, liability, expense, revenue, whatever. Okay, and I'll show you a diagram that'll help you with that in a minute. Then I'm going to ask, has that account increased or decreased? Okay, so I'm going to say, 1, what account am I working with? 2, what type of account it is. For example, is it an expense? Okay, if it's an expense, is it increasing or decreasing? If it's an expense and it's increasing, by the way, which is what it should be doing just about every time anyway, then I would know when all expenses which work the same, when they increase, I will debit that. Okay, so hence, if you know the account type, all accounts of the same type work the same. So all expense accounts work the same, all revenue accounts work the same, all asset accounts work the same, all liability accounts, drawing, and of course, the capital account. I'll go into that in a minute. But, for example, okay, if you purchase a piece of equipment, okay, that costs $10,000 on account. Now, the on account thing seems to throw people. Those words on account means you either use 1, accounts payable, or 2, accounts receivable. In this case, because we purchased it, we're using accounts payable. So when you purchase a piece of equipment, let's say for $10,000 on account, you're using accounts payable. Think of it more of like a store credit, not as a credit card. Okay. Now, so hence I'm using 2 accounts just like I see here. Now I ask myself, what type of account is sorry to do this from this angle, is equipment. Okay, equipment is an asset account. So hence I would write the word asset above it. This is how I would do this if I was doing T accounts. Okay. So hence equipment is an asset. On the other hand, accounts payable is a liability. So hence I write liability above it. So hence it looks like this. Now I ask myself, my equipment, which is an asset, I purchased equipment on account, is it increasing or decreasing? Well, because I got more equipment, it's increasing. So I may put a little plus sign above that. Now, this is just me making notes on it. This is not something you'll see. On the other hand, my liability account, accounts payable here. Okay? Well, am I increasing or decreasing my accounts payable, which is a liability? The answer is that you're increasing it because now you owe more money. Okay, so hence I've increased my debt, so I increased my accounts payable. So in this case, they are both increasing, yes? When you have a transaction with two accounts, they can both be increasing, they can both be decreasing. One can be increasing, one can be decreasing, it doesn't matter. You can have any combination. Okay, but I take a look here and I say, okay, my equipment, which is an asset, is increasing. My accounts payable, which is a liability, is also increasing. Now I ask myself, when I increase an asset, okay, when I increase an asset, okay, do I debit or credit it? And the answer is I debit it. Why? Because every time that you increase an asset, you will debit it. So in this case, I will debit for $10,000 my equipment. Okay? On the other hand, my liabilities, was that increasing or decreasing? My accounts payable account, the liability, is it increasing or decreasing? The answer is that it's increasing also. Now liabilities, on the other hand, increase with a credit. So hence I will credit accounts payable for $10,000. Now, so in T account form, it looks like this. Now, one way I know I'm right is that my total debits and my total credits here even out. I have $10,000 of debits and I have $10,000 of credits. You have to have at least one debit and one credit, at least one of each. Now, you can have, I said before, 5 debits and 1 credit. 1 debit and 10 credits doesn't matter as long as the dollar amount equals out. Okay, so this is an example of knowing that it's right. Now, what I suggest you think about is how many different types of accounts are there? Well, really, I like to view it as there are 6. Assets, liabilities, and then in the equity section. And if you look in your book on Chapter 1, you'll see how stuff flows from the income statement into the statement of retained earnings or statement of owner's equity, depending on which one they mention, and then into the balance sheet in retained earnings. Any way you look at it, revenue, expense, drawing, and capital all eventually end up in the equity section of the balance sheet one way or another. So, I've come up with this diagram. And you can see in this diagram, which I kind of trying to hold up and talk to at the same time, you see that assets will increase with the debit and decrease with the credit. Liabilities will increase with the credit and decrease with the debit. Then I go into the equity section over here, these capital accounts, okay? The capital account here increases with a credit and decreases with a debit. The drawing account increases with a debit and decreases with a credit. The revenue account increases with a credit and decreases with a debit. And the expense account increases with a debit and decreases with a credit. Now, I'm going to back this up again, and I want to point out, you see the little green dollar signs on all of them? You notice they're all on the plus side? What that means is that your ending balances, when you go to make a balance sheet or even when you go to make a trial balance, they should all be on the plus side. Okay? And that's what they call the normal balance of the account. So when you're increasing an account, you go with the normal balance. So hence, all assets have a normal debit balance. So I know when I'm increasing an asset, I debit. And when I'm decreasing an account, I go against the normal balance. So hence, an asset has a normal balance of a debit, but I'm decreasing. So I will credit the account. I'll go against a normal balance. Again, let me hold this up so hopefully you can see this a little bit better. Sorry, I'm not very good at this, but okay, and hopefully that'll help you. Okay, another quick example of this would be if I paid my utility bill. Okay, if I pay my utility bill, okay, let's say $250. Okay, I get it in, I pay it, write a check. Checks are the same thing as cash. So, because you're going to assume they're good until they're not. So, in this case, I would actually be increasing my expense account, utilities expense, and decreasing my cash, which is an asset. Well, when I increase my expense account, which you see over here, you would end up debiting that account. Obviously, because all expenses increase with the debit. On the other hand, my cash, which is an asset, I'm decreasing it. So I have to go against a normal balance, which is a credit. Okay? If you have any more questions, please email me. I'm here to help you. I know other professors generally don't do this, but I don't mind answering your emails this week. I think it could help everybody. Anyway, till next time I see you, enjoy the weekend, and see you next time.